This financial spreadsheet shows how to purchase with a 90% mortgage that the French banks are currently offering as of March 2010 to purchase in this new development in Beausoleil, Monaco, which will be delivered in Q2 2011. So we look at the net price of the property and the VAT inclusive price, followed by the mortgages and the corresponding rental income, and the offsetting of the interest and other expenses against the rental income to show a tax-free investment. And also, after 15 years, there is zero capital gains tax under French law on selling on the property. So on the net price of the apartment, excluding the furniture, it's 244,342 euros. With the VAT at 19.6%, it's an extra 47,891 euros. So the VAT inclusive price of the property with VAT is 292,233. The VAT net price of the furniture is 6,000 euros, and with VAT at 19.6%, an additional 1,176 euros, bringing the VAT inclusive price to the furniture as 7,176 euros. So the total net price of the property with furniture is 250,342 euros. And the VAT total is 49,067 euros. So the VAT inclusive price of the property is 299,409 euros. Now the purchase fees include the registration fees, the notaire fees, legal fees, etc., which approximately work out at 4% of the purchase price. That's an additional 11,976 euros, of which the VAT on that will be reimbursed by the notaire after completion. So the total investment with VAT for the property, the furniture and the legal fees is 311,385 euros, and the total VAT reimbursement is 49,067 euros, which will be reimbursed between 3 and 4 months after completion, where the stage payments are paid VAT inclusive during the construction, and the notaire then issues a complete lump sum of VAT refund, which is processed the first quarter after delivery, which can come 3 to 4 months after completion. So the total net price of the property then, with legal fees, works out at 262,318 euros. Now 90% mortgage can be arranged with the French banks, which is on the total net price with furniture. So that's on the 250,342. And 90% of that amount is 225,308 euros. So in order to complete the sale, the difference between the total price with VAT and with legal fees and the mortgage of 225,308 is 86,078 euros. So this is the initial personal contribution. Now, on completion, between 3 and 4 months after the completion, the notaire refunds 49,067 euros, which leaves your total net personal contribution at 37,011 euros. So this is what the investment will work out as. Now, the mortgage rates currently are 0.64% above, 2% above the base rate. So it's 2.64%, which is capped at 4.14. So it won't go above 1.5% above the base rate. And that's capped for the duration of the mortgage, whether it's a 15-year or 20-year mortgage. So the repayments then fixed will be at 14,826 euros per year. Now the rental income is at 10,036 euros per year, which is 3.8% of the purchase price. Now the VAT on rental income is 5.5%. So the investor, or you, the purchaser, are obliged to refund this to the French VAT office once per year. So that works out at 9,513 euros, which is exactly 3.8% on the 250,342 euros. Now, after your annual expenses from your accountancy fees to do your tax returns in France, non-refundable charges, which are property charges, insurance fees, etc., and then your land tax or your tax foncière, which is normally exempt for the first 2 years, subject to the developer issuing the H2 form. So your net expenses then less your rental income give you a net return of 8,873 euros. So then to see the difference between the mortgage and the rental income, we see that there's a shortfall of approximately €5,500 per year, where the rental income is index linked, as we can see from these figures, but the mortgage repayments remain the same because you're irrespective of the interest rates going up, it's the mortgage that expands or contracts accordingly. Your repayments don't change. 14,826 is what they remain as. So you know precisely what your mortgage will be each month for 20 years. And your rental income will be increasing accordingly to the indexation. So we can see what the net cost per month will be. So approximately €5,500 per year, reducing each year for the 20 years. Now on the income, we can see that all these expenses are offset against your rental income. So you have tax-free rental income for the duration, effectively up until about year 17, year 18, unless you have further expenses you can incur. But as the mortgage is paid off, you have less and less interest to offset against your rental income, as you can see from these columns here. So on the spreadsheet, your rental income will show, as far as the tax are concerned in France, that you can offset the interest on the mortgage, your accountancy fees, non-refundable charges, land tax fees, legal fees, furniture depreciation over 10 years, and building depreciation over 25 years. So you have a net loss that you can roll forward each year and are therefore not liable for income tax. So this is a tax-free investment where you're embracing the expense that can be offset against the rental income. Now in this location, Beausoleil and Monaco are quite unique in their location, in that there's a constant demand for property, and property is defying the international downturn in prices. But in this area, it's a very lucrative investment area, and we're assuming a 5% growth per annum, even though prices have been increasing at a higher rate consistently for the last number of years. So on a 5% growth per annum, we can see after year 1, from when it's complete, the price has gone up from 311 to 314, and a compounded growth each year over the 20 years. We can see by year 2030, at a 5% growth per annum, the value will be appraised at 794,000. After your mortgage is paid off, shows a net return of 460,891. So this concludes how to invest in this new development, which will be ready in Q2 2011.